The RSI indicator is one of the best momentum and trend spotting indicators out there. Known for its simplicity and accuracy in identifying the speed and change of price movements, this indicator can sometimes work decently even on its own. However, there is an improved version of the RSI indicator that also takes market volatility into account. This indicator is called Trendilo. In this video, we are going to explore what this indicator is and how we can use it to identify super profitable trades in the market. If you find this video helpful, remember to leave a like. Let's go. Now, to add this indicator to your chart, you'll first want to go to the trading platform. If you need it, the link to it will be in the video description and comments. Then open the indicator search tab and type Trendilo. Select this one by Dudones. Trendilo is a trend identification indicator. It helps traders identify trends in price data by calculating the percentage change of their chosen price source and applying smoothing to it. This indicator is made up of several different components. Let's go over them real quick. This gray line here, which usually changes color to green and red, is called the Arnaud Legoux Moving Average, or ALMA. ALMA is mobile media that is designed to have a minimal amount of delay, making it more responsive to recent price changes than many other types of mobile media. This is important because it will allow the indicator to filter out noise in highly volatile market conditions, something the RSI indicator often struggles with. Then, these purple lines here are called the root mean square, or RMS band. RMS bands serve as an essential part of understanding ALMA's position relative to the expected range of price action. They are designed to encapsulate normal ALMA movement, essentially representing an average magnitude of the trend. By comparing ALMA with these RMS bands, we can easily determine whether the price is trending or not. Then we have this line in the center, which is called the zero line. The zero line serves as the baseline for trend identification. When the ALMA band goes above the zero line, it indicates the start of an uptrend. And when it goes below the zero line, it indicates the start of a downtrend. Now that we know what this indicator is made of, the next question is, how can we use it to trade? Well, I'll show you. But before that, we need to customize this indicator's settings to suit our strategy. To do this, just double-click on it to access the settings panel. As you can see here, the first setting we can change is the font. The source is essentially the price data that the indicator uses to calculate trends. It could be the closing price, the open, the high, the low, or any of these sources. For this strategy, we'll leave it at the default closing value. So right here we have smoothing. This is the process that reduces price volatility and random fluctuations, making the underlying trend more visible and easier to spot. It's a vital step in refining our trend signals. This setup will refine our trend signals, reducing the effects of high volatility and random price fluctuations. A larger number will make the indicator less price sensitive, and a smaller number will make the indicator more price sensitive. For this strategy, we'll keep it at the default value of 1. Next is the look-back setting. This refers to the number of historical candles the indicator uses to calculate the trend. If you increase this number, the trend will appear smoother, reflecting more of a longer-term trend. A smaller number, on the other hand, will represent more short-term trends. So for a good combination of short and long-term trend detection, let's reduce the look-back length to 25. And then for the rest of these entry settings, we'll leave them at their default values. Then go to the Inputs tab. Here, the only things we are going to change are the plot colors and these two background plots. Whenever the color is green, we're going to change it to red. And whenever it's red, we're going to change it to green. Let's do this. Then click OK. Now, the way this indicator works to identify market trends is quite simple. Whenever the ALMA band crosses the zero line, it indicates an uptrend. But when it breaks above the upper RMS band and changes its color to red, it indicates an extended uptrend or an overbought market condition. On the other hand, whenever the ALMA band goes below the zero line, it indicates a bearish trend. But whenever it goes below the lower RMS band and changes its color to green, it indicates an extended downtrend or an oversold market condition. Now, the way we are going to use this indicator to trade is like this. In an uptrend, let's wait for the SOL band to indicate an extended downtrend or oversold market condition by going below the lower RMS band. After that, once it closes above the lower RMS band, we will look to enter long trades. Now, you might be thinking, but how do we enter short trades in a downtrend? Let's wait for the ALMA band to indicate an extended uptrend or overbought market condition going above the upper RMS band. After that, As soon as it closes below the upper RMS band, we will look to enter short trades. Now that's good. However, for the strategy I'm going to show you in this video, the Trendilo indicator will be used to identify trend exhaustion and reversal points based on overbought and oversold levels in the market, which means we are going to need a general trend identification indicator. For final entry confirmation, we could use the close of the ALMA band above and below the lower and upper RMS bands respectively. However, if we use this strategy, there could be a lot of false signals. To avoid them, we will need a buy and sell indicator. Lastly, volume is super important. For this strategy, we will also need to add a volume indicator. Open the indicator search tab and type volume oscillator. Select this one by Tradingview, which is in the technical tab. The buy and sell indicator we're going to use is called a dual band filter, this one by Colin Mack. For the general trend identification indicator, type exponential moving average, this one. Double-click on the volume oscillator and under the Style tab, change the oscillator graph color to yellow for increased visibility. Then double-click on the EMA and in the Entries tab, change the length to 200. Then go to the Style tab and change the EMA color to white. Click OK. For the dual band filter, yes, we're going to leave all the default settings. Now to trade using this combined indicator strategy, here's how we will do it for a long trade. The first thing we need to do is establish that the market is in an uptrend. To do this, we just make sure that this 200 period EMA is sloping up like this, and that price is trading above it. This indicates a general bullish trend in the market. Then within that uptrend, we need the market to pull back to give us an opportunity to enter our trade, because we can't just FOMO that uptrend from anywhere. Also, let's not just look for a regular pullback. We need a pullback that causes the market to be oversold within this uptrend. To confirm this, we just wait for the Trendilo indicator to print a green graph below the lower RMS band. This not only indicates a pullback in the market, but also an oversold market condition. After the pullback, we want the twin range filter indicator to print a buy signal to indicate the possibility of the market continuing in this general uptrend. At the time when the buy signal is printed, the soul band of the Trendilo indicator should be gray in color. If it's red like here, we'll have to skip that setting. After that, we need to confirm that there is enough volume in the market to push the price in the direction of our trade. To do this, we just make sure that this yellow volume oscillator is above the zero line. Last but not least, as further confirmation, if we draw a support resistance level here, you will notice that the most recent low of the price has bounced in this zone. This extra confluence is important because it means the market respects this zone as a barrier, reinforcing our confidence in this particular trade. All of our entry conditions are met on this candle, so let's enter a long trade here. The stop loss will be set below the low of the most recent swing. For the profit, let's set it to 2.5 times the risk. We let the market work and we make a profit. For short trades, let's just invert all the conditions. The first thing we need to do is establish that the market is in a downtrend. To do this, we just make sure that this 200 period EMA is sloping down like this and that price is trading below it. This indicates a general bearish trend in the market. Then within that downtrend, we need the market to pull back to give us an opportunity to enter our trade. Also, let's not just look for a regular pullback. We need a pullback that causes the market to be overbought within this downtrend. To confirm this, we just wait for the Trendilo indicator to print a red graph above the upper RMS band. This not only indicates a pullback in the market, but also an overbought market condition. After the pullback, we want the twin range filter indicator to print a sell signal to indicate the possibility of the market continuing in this general downtrend. By the time the sell signal is printed, the soul band of the Trendilo indicator should be gray in color. If it's green like here, we'll have to skip that setting. After that, we need to confirm that there is enough volume in the market to push the price in the direction of our trade. To do this, we just make sure that this yellow volume oscillator is above the zero line. Last but not least, as an additional confirmation, if we draw a support resistance level here, you will notice that the most recent high in price has bounced from this zone. This extra confluence is important because it means the market respects this zone as a barrier, reinforcing our confidence in this particular trade. All of our entry conditions are met on this candle, so let's enter a short trade here. The stop loss will be set above the most recent swing high. For the profit, let's set it to 2.5 times the risk. We let the market work and we make a profit. Now remember that the strategy presented in this video is not financial advice. Do your own research and due diligence before making any business decisions. With that said, I hope you found value in this video. If you enjoyed it, please click the like button below and consider subscribing to stay tuned for more information about trading. Thanks for watching, and until next time.